Past couple of weeks, we have received a lot of strong U.S. economical data. We had a strong non-payrolls report for January. We saw the CPI for January, although year over year is decreasing, was stronger than anticipated and a bump higher than December. We also saw the PPI decrease, but at a slower rate. All the data points to bullish US dollar, and we can see that for February, after almost hitting 100, it's back at 104. This could just be a pullback before the next leg down, but either way, right now, a pullback means weak gold because gold is priced in dollars. So will gold continue to lose its shine? Don't know. Let's go to the charts. So this is gold on a monthly chart. And we have monthly sellers at 230. And we have monthly buyers at 214.15. Now, honestly, I don't ever see gold getting down here ever again, because over time the US dollar and all fiat is designed to lose value. But I should never say never in trading, right? Okay, so let's just look at the 2030 level. We had the first sign of sellers back in August of 2020. Price came into the zone again in March of 2022. So apparently all the unfilled sell orders were not filled, and then price collapsed. However, since November, prices rallied much higher, which makes sense, right? The dollar peaked around this time and started declining. And like I said, in February, the dollar has rallied back and gold has fallen, right? Again, because of that inverse correlation relationship. So how much further can gold decline, right? You can say that it is range bound. We'll say let me put that in red, and we'll put that in green. We'll say the red is 1950. And the green is 1600. Now some are saying out there that gold can get to 2,500, 3,000 this year. That's pending a very bad recession and a total collapse in the equity markets. I mean, before we get to 2,500 and even 3,000, we got to breach this monthly sell zone. Okay, so let's go down to the weekly chart. You know, for the trend traders, you could say price broke the trend after a roughly 14 to 16 week price increase. I want to look at this zone a little more on the daily chart. So I'll just, once you have a breach of a trend line, it likes to retrace before consuming in the original direction. We have a pause in price at 1800, so I would say this is potentially the next short-term target. And I'll do that in white. Could it fall down to 1600? It's possible. Don't really know. Let's go down to the daily chart. Do want to bring in these values here. So on the daily chart, we can see price breach the 50-day moving average. We see a crossover of the 8 and 20 moving average, which signifies a reversal. Now this was just price action, the buyers and sellers building a base for a breakout. They just happened to break out to the upside back in late December. So what I would anticipate happening is price pulling back to eventually take it down to the round hole number of 1800. And we're going to say this zone, let's just call it 1885. Daily sellers, 1885. So I will be monitoring gold. Let's see how this setup pans out, if it does. And let me just mark short term target. Okay, till next time.